The morning report for the 23rd of June 2009. US stocks tumbled overnight, extending losses from the first week decline for global equities in a month, as world banks come out to say that the recession will be deeper than previously forecast. Now come on, 2 weeks ago the US banks were coming out saying that recession wasn't going to be as deep as forecast and it's probably going to be shallower. Look, I think this is a lot of noise around the fact what is actually happening is a bear market rally. Now we've been calling this for some time now. We have seen the market jump up 30-35%. Some stocks have gone as high as 50-100%. Now there's some good gains in the marketplace. When that happens, people will dip in the pockets and take those gains out. It makes sense. It makes good business sense. I think what we're seeing here is a pullback in the marketplace as people start taking profits. Obviously, there's still concerns about the recession. Obviously, this is going to go for quite some time, a number of years yet, in fact. I mean, we still haven't seen unemployment rise up as high as 10% or 8.5% as the Australian market's predicting. And we don't expect that to happen to the end of 2010. And you also expect to see interest rates rise in late 2010, 2011. We also can expect to see inflation move upwards, which will force interest rates to go up. There's still a lot of work to be done. The governments are spending the money in the right places and infrastructure work is getting done. So all of that is very positive, but just keep in the back of your mind, this is a bear market. We will see this sustainable for a couple of years yet, and the point is to adjust your investing profile and adjust your investing attitude to make sure that you are taking the maximum benefit out of a bear market. Like I've been saying a few times now, sitting and holding is no longer a really good opportunity unless you've got enough income off your portfolio just to sit and wait it out. If you were looking for growth, you're going to need to take profits, and obviously now with the market falling, it's a good time to do that. Now, how far down will it go? It's hard to say, but my long-term prediction, because I'm not very good at short-term ones, is simple. I think we'll see a bit of a pullback in the next couple of months, especially leading into reporting season. If there's any bad news coming out of companies, I suspect there probably would be for some of them. And towards the end of this year, I would expect to see the market have rallied back up to around the mid-4,000s, which would be a nice little gain from this point. So keep that in mind when you're looking at your portfolio. There's still a lot more to happen. There's still a lot more to come. Don't stay out of the market though. There are a lot of good opportunities in there with individual stocks. You've just got to be there to pick them up when the timing's right. Now in other news, we saw the Dow Jones down 2.4% last night. The S&P 500 down 3%. The Nasdaq also down 3%. We expect to see a good drop in our market today, expecting to get a down day of around 2.3%, or the market will get back to around 3,800. The Nasdaq was down 3.4%. The FTSE was down 2.6% overnight. Now, yesterday our market was up slightly, up 0.5%, which is a good little gain in the marketplace, but I expect we will lose these losses very quickly today when the market opens. Gold price was down 1.6% to close at $921 an ounce. Oil dropped 3.6% to close at $67 a barrel, and the Aussie dollar lost some ground as well. It's now sitting at just over 78.5 US cents, down 2.3%. For more information, go to our website at growyourwealth.com.au.